Welcome back to the channel, YouTube. This is Invest in Yourself. My name is Cameron. This is a highly anticipated video that I've been waiting to create for a while. I've been eyeballing this company for about 2.5 months and been doing my research and finally went ahead and put a video together, and I hope y'all enjoy it. Let me know down in the comments what y'all think and pop a like and subscribe, and we'll get right into it right now. So company we're doing, as you can see, Lemonade Insurance Company, and there's a lot of information that's been flowing around this company the last, I would say, 90 plus days. And this is a tech-centric insurance provider disrupting the industry overall and has all the makings sort of a multi-bagger for patient investors overall, YouTube. Here are the two reasons that I'm potentially looking to invest in this company overall. First, it's a new generational business for millennials and Generation Z and how it matches up with the business models for those type of investors and insurance, people buying insurance, new age insurance, new people are getting into it more efficient ways. And number two, the massive growth with this, the newer allure to this insurance business compared to traditional businesses. And right now I'm going to show you a quick little clip from the investor page, and we'll kind of talk about it after it comes back. So just pause 1 sec, we'll get into it.
Drivers of this growth, that's why I think things get really interesting. 90% of our customers tell us they are not switching from anyone to Lemonade. That's extraordinary. You don't have to watch a ton of TV to know that the entire insurance industry is predicated on the I switched and I saved value proposition. I switched to so-and-so and I saved $500. You've seen the commercials. We're not playing that game. We're playing an entirely different sport. We are picking the fruit from the tree before it can even go into someone else's basket. When you have 90% of your customers coming to you before they've gone to any other insurance company, when they're young and the needs are modest, and then as they go through life cycle events, their needs for insurance grow, and we hope to be there to grow with them for not only years, but decades to come. And if we acquire a customer while they're just stepping onto the conveyor belt of life, if we can continue to delight them, there's every reason to believe that they will continue to stay with us and grow with us as they go through predictable life cycle events.
Based on the data from its S1 filing, looking at the highlighted section here, about 70% of Lemonade's customers are under the age of 35, and 90% stated that they haven't even owned insurance before. And it's a tech-forward approach. It appeals to a very young, mobile, native consumer overall. Looking at these milestones corresponding with the increased overall premium customers, this is already happening as demonstrated by the company's 17% year-over-year increase in annual premiums per customer to about $190 in its most recent quarter overall. But the insurance business needs to throw out its current baby boomer oriented playbook, in my opinion, YouTube. This may be a challenge for legacy insurers, but for Lemonade, this is a large scale change. It gives millennials a major edge. So, how do you believe I say this, YouTube? It's like, let's look at it from both sides of the counter. From the customer side, this insurance has built their customer interface with millennials in mind, and it's well known. I'm a millennial. I was born in 1982, so I'm on that beginning stage of, or that beginning date of being a millennial, that some of us or most of us are not most comfortable talking to people, and they prefer to self-checkout the grocery store, e-commerce for shopping, etc. And that said, Lemonade knows this full well, and catering to millennial customer service preferences, the company uses chat bots instead of phone-based customer service. And in short, no more waiting on hold for the next available representative. And so next we're going to check out this next video, and we'll get talking about it next. So going into it now.
Dependency on agents helps us lower costs and pass on savings to customers. This can be dramatic, with minimum premium costs often 50% less than our competitors for first-time buyers of our renter's insurance. In addition to the purchase experience, we've completely reimagined how claims work. Claims are the most important part of our business. When you buy insurance, the product you're actually buying is the ability to file a claim. So we designed a digital process that allows us to handle and pay claims much faster. Our AI bot, Jim, can often determine if a claim is valid, and if it is, pay it in seconds. In about 96% of the cases, Jim will take first notice of loss.
And if you need, looking at this company at filing a claim, the company's AI-powered chat box will go through the whole process. In turn, not only does this allow a live stream representative, but the majority of claims are paid out instantly, as we can see here on the site. 3 seconds in some cases, being a 5-star rated insurance company. Claims rating on their app is almost perfect, with 30% of it handled within AI, and so that obviously you don't even need to talk to a real person, insurance provider, insurance broker, that will handle your claim most of the time, 30% of the time, through just the app itself. But however, as an investor, I'm sure you're wondering how they pull it off, and it's really simple. Jumping over to the other side of the counter, let's take a look at the company's back end, and we're going to go to this next video.
All of our interactions, all of our marketing, all of our underwriting, all of our claims, customer support and sales are managed by a single system. Every line of code was built in-house. And it's been amazing to see how this data feeds into the system and is fed by it in ways that have blown our minds.
All this amounts to a closed-loop system where every part of our business enriches and is enriched by every other. The whole is way greater than the sum of its parts. That's really powerful. Every customer interaction can make us smarter. And every customer interaction is an opportunity to leverage all that we've learned.
Firstly, Lemonade Company is using machine learning, and they can better assess price risk and also maximize animation that can operate with lower levels of overhead cost. And so by offloading most of its risk and reinsurance, the company isn't even trying to make a profit from underwriting. Instead, Lemonade is largely building a fee-based business model. This means more consistent earnings and greater reason for investors to keep giving shares a premium valuation. So going to this next part of the video.
That's why we built our own insurance carriers in both America and in Europe. We own our licenses, we own the relationship with the regulators, and we own the relationship with the customer. Building our platform from scratch, every license, every line of code enabled us to reimagine what the business model of a modern digital insurer can be. At Lemonade, when you pay us $1, you know in advance that we will keep a fixed fee, currently 25%. We use the remaining 75% to pay your claims and reinsurance, and if there's money left over at year's end, we give it back to nonprofits of your choosing. These two programs, our charitable giveback and our reinsurance, they act as ballasts, stabilizing our flat fee, and we believe that changes everything. Insurance is a high retention subscription business, which is why the top line of insurance companies are usually stable and predictable, but their bottom lines can literally fluctuate with the weather. Earthquakes, hailstorms, wildfires, hurricanes, all these can strike with little or no warning, and that volatility means that insurers often see wild swings in their results. And that is why they must keep such capital-intensive reserves for those rainy days. Lemonade works differently. The way we have structured our reinsurance means that we have dramatically curtailed any tail risks, letting us operate as a capital-light business with predictable results, even in years with bad surprises. What about the years with good surprises? Well, when the variance is favorable, we share that good fortune with nonprofits chosen by our customers. As a certified B Corp and a mission-driven company, this annual giveback is hugely meaningful to us all. But it goes much deeper than just feeling good. Taken together, our charitable giveback and our reinsurance, they mean that we are less incentivized to deny your claims, and you're less incentivized to embellish them. And so the insurance vicious cycle of spiraling distrust starts to look more and more like a virtuous cycle that we believe ultimately lowers friction, lowers fraud, lowers churn, lowers costs, all to the benefit of our shareholders, our customers, and their chosen charities.
Hope y'all enjoyed those couple of video clips we kind of went over covering the first section, but rolling now into my second point with the massive growth and new allure in the insurance company. this market overall is huge, and the company's filing to go public. It states that there's over $5 trillion paid annual in premiums for property, life, and casualty insurance globally. Lemonade is focused on 3 products in the U.S. and Europe: homeowners, renters, and pet insurance. Even with the approval to sell homeowners policies in fewer than half of the states in the U.S., it saw a 115% increase in premiums in the most recent quarter at $155 million in the forced premiums overall. As the company expands approvals to its products across the U.S. and Europe, it will gain access to even more total addressable market, like we were talking in previous videos. YouTube, this company is not even offered into all U.S. states as of now, and fully in Europe. Though, Lemonade uses technology, make to insurance more delightful, more affordable, more precise, and more socially impactful. Artificial intelligence chat box makes it easy to get a quote, sign up for coverage, and a robust mobile app that makes it easier to file claims. And data science and machine learning enables instant claim payments that have been given back 34. They give to 34 nonprofit organizations just in 2020, totaling a little over $1 million. So that's one thing we have to take in effect, that some of the back profits they're giving that to charity overall. And this tech-based and unconflicted business's approach has captured almost 1 million customers and is putting the company on track to post at least $86 million in revenue total in 2020. As we can see, their next one, they're forecasting. And one thing we have to realize, the forecasting for the insurance business, especially in 2020 with the pandemic, is restricted on guidance, but they're still keeping their full year guidance overall for 2020. And looking at their employees, they're just only about, they're a mid-size an employer. They're a little south of 400 total employees overall. So they don't have a bunch of overhead, paying a lot of overhead for employees, because it's a lot of AI, learning, and 30%, as we saw earlier, handles most of their claims online. So they're getting a lot of that through just artificial intelligence. So the company has big plans to use its edge and start providing other lines of insurance. In fact, the company has already expanded outside homeowners and renters insurance, and now offers pet insurance overall. With that in mind, it's not far-fetched to say the company could eventually enter the auto insurance business or other types of property and casualty insurance. Getting into the lines that life insurance also doesn't seem out of the question either, but given their focus on millennials settling down, simply put, the growth train on Lemonade will remain motions for years to come. And right now, the company's cash and cash equivalents and investments are totaling around $296 million. YouTube, that was numbers back in June of 2020, and I expect that number to probably get a little bit lower, because they end up doing a hiring freeze during the heights of the pandemic during Q2. So they end up probably going to spend a little bit more money this Q3 of hiring and putting more money to work to grow as a business overall. But as my looking as overall, Lemonade is a fast, disrupting insurance company overall. And as we see in their growth loss ratio overall, that looking at, the biggest thing, how they're growing their customers, 160% and 84% just this year. It just shows you the massive growth rate that we're facing with this AI learning insurance company. So, and by catering to millennials, they have an edge over legacy rivals. And it may offer just a few insurance lines right now, but in the years to come, they could, accelerate growth by entering the auto and life insurance businesses. But YouTube, just keep in mind that this company has been losing money, and as it invests its profits in growth, and it's only had 1 quarter under its belt so far as a public company. So invest wisely and do your research. Another thing we have to take for this company overall, before when it was private, before it went public, Q3 is historically a moving season for them, and has been typically their strongest growth quarter, as many people move in time for new schools during the school year, and people getting settled down with their kids going to school. But remember, we have to take into effect when some of these new Q3 earnings come out on the 11th of November, that the pandemic has put some school openings in question. And I really don't know how this will change the the migration patterns of Americans, because this whole pandemic has changed everything from people being locked down and can't travel freely, and plans got pushed aside. So their guidance and plannings assumes that some of the historical season patterns will persist, but the impact may be less pronounced or more gradual as compared to prior years. So I hope y'all enjoyed this video on Lemonade. I kind of covered just a brief synopsis and kind of break down some of their numbers overall. I wanted to just kind of give you an overall kind of where I'm coming from Lemonade, and I'm looking to buy this company, but I'm just trying to get some further clarification as monetary and fiscal policy is waiting till after the election. That gives me more solid foundation to be that I can see things clear. Right now, the market, especially this week and going into next week, we're on stable ground. So be patient. I think this is a great company. When we get on a lot more, solid ground, it's a great company to get into for a long-term investment because of the disruption and what they're doing in innovation as this new millennial insurance provider. So let me know what you think down in the comments, and thank you so much again. And remember, always invest in yourself.